Hello folks, welcome to Pro Trader Strategies Market Commentary for Thursday, April the 29th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I would talk about the economic data, the geopolitical environment, and how those come in to impact the markets with some of my market analysis. I do the same thing in these daily market commentaries, but I also talk about my option strategies I'm implementing into my portfolio based on those assumptions we come up with in the market analysis. For you folks, I've streamlined that process in order for you guys to quickly spot the optimal option strategy for any given assumption. So please go to protraderstrategies.com, check out those webinars so you can quickly and easily discern what option strategy is best suited for your directional move. All right, so without further ado, let's get on with the economic data across the pond. Spanish Consumer Price Index coming in a little hotter than expected at 2.2%, expected to be 1.9%. German unemployment change in line with expectations at around 16%. That's pretty high compared to what we're used to. Ours isn't nearly that much, and we still think it's very high. Difference between European and U.S., really, to be quite honest. All right, let's get back over here to the United States. Advanced gross domestic product coming in at 6.4%, slightly lower than the estimated 6.8%. Not really a whole miss, big miss there. I'd say it's pretty close to in line. The one that we do need to look at is the advanced GDP price index coming in at 4.1%, expected to be 2.2%. So really hot GDP in the near term, it looks like. That is the highest reading, folks, since we have got, or the highest reading we've gotten since 2008. All right, the fourth quarter of 2008. We know what happened after that. So really seeing some huge numbers out of this economy, still with the pandemic kind of looming over us, right? Unemployment claims coming in slightly higher than expected at 553,000, expected to be 545. Pending home sales, oh my gosh, like existing home sales, all of those numbers we've been seeing come in really well. Home market, but this one, pending home sales, only up 1.9%, expected to be 4.2%. And a revision to last month's number down by a full percentage point. So those pending home sales really kind of throwing a kink in the cogs of this whole housing market, where we're looking at these housing numbers and seeing them knocking out of the park, but the pending right now a little bit lower, probably due to some higher interest rates going on here, all right? That could have put people on pause. Natural gas storage is rounding it out at 15 billion cubic feet, expected to be 8 billion cubic feet. So we saw a build there. That's not really a great thing, and that's a bit surprising because I think we've seen some colder than normal weather across the United States in the Midwest, where, you know, it is spring, but they're still getting snow. That would have to make me believe that people are using natural gas to heat their homes. That's surprising we're seeing that build there, though. All right, let's get on with the overall markets. We've got crude oil moving higher by about 77 cents. Really not phased at all by yesterday's surprise build there. Continuing to move to the upside. That's going to be based probably on demand, not necessarily the supply jamming up in the system. We're still seeing some strength here and breaking that high again here. So as it was looking like we were going to go into this correction phase and maybe break below the 50-day simple moving average and start correcting down into the mid 50s or lower, that is getting broken right now to this upside. Is it a head fake? You know, with some of these economic data, we're getting really mixed bags across the pond. So, you know, with that said, is that demand going to be there? I'm not playing crude oil, but I have to believe that with the supply numbers that we're seeing, that crude oil has got to start showing some kinks in the armor and start rolling over here a little bit. And I think the 50s is probably the sweet spot still. Anyway, moving on to the bonds, they're off by a little bit better than a half a point here on the day. Yesterday, I was kind of rah-rahing with myself as there was a charge into the close with this bonds here, and thinking that we got above that 50-day simple moving average, having a nice little bottoming pattern here, obviously not confirmed. Today to the downside is continuing this bearishness along this 50-day simple moving average, just continuing to ratchet above and below that number as we continue to slide here. That's indicating higher interest rates, which could, you know, people are looking at buying a home and see those interest rates starting to rise. That gets you a little bit nervous, I'm sure. All right, And then moving over to gold futures here, they're off quite, $6 here on the day. I can't get above this little line that not probably a whole lot of folks out there have because they're watching Fibonacci's and things of that nature. But we found this line in the sand, and it is really coming true to form that 17, what is it, like right around 1788, 1780, let's call it, is a line that we're going to have to keep an eye on. Could be because as it approaches that 1800 psychological level, people start selling against that a little bit ahead of that number and seeing some weakness. We still are above the 50-day simple moving average, so gold bugs still probably clamoring for that 1800 there. We got Bitcoin coming off again today. Yesterday we saw some weakness, continuing to see this today. Could not settle above that 50-day simple moving average. And for some of you new folks out there watching this, 50-day simple moving average really gives us an indication over the next few weeks whether there's bearishness in the market or bullishness in the market. So settlement below that really starts seeing the weakness start to creep into this market. So struggling to get above that is not a very positive sign for Bitcoin. VIX, we're seeing start to move to the upside. Well, the Dow Jones is positive. Why is the VIX moving higher? Well, we're getting this whole rotation again here, where again, I think that this is going to be a theme for 2021, where it rotates in and out of tech, some of the maybe even S&Ps into the blue chips. Today we're seeing that rotation back into the blue chips. Yesterday, Microsoft, Boeing, a couple other ones were really negative drivers to the Dow Jones Industrial Average. And while on the flip side, we're seeing Google really drive the NASDAQ to the upside, and that was a bit of that rotation. Today, we're seeing a bit of a flip. Now, Microsoft's still not out of the woods yet. It's still coming off. We'll talk about that here in a moment. But Dow Jones recovering off of those big high flyers and the Dow getting crushed yesterday. And NASDAQ is in positive territory, just albeit slightly here on the day. Did make a new high there, as you can see. E-mini S&Ps made a new high during the day session yesterday. This high happened again during the day session as well. So continuing to make those highs during the day is very strong, despite the fact that we're seeing a bit of weakness throughout the day today. Really what we're seeing here is that we've created these all-time highs during the day. That to me signals some institutional strength there. But we are seeing a lot of these equities during their earnings come out with really good earnings and still suffer, maybe because they're doing some comparison and contrasting here. Netflix saying that they were doing very good, while YouTube basically is a competitor, direct competitor to the viewers and the eyeballs that Netflix has. I mean, the viewership on a daily basis is about the same. That's what really drove Google to the upside, driving the NASDAQ as well. Today, we got Facebook coming out with better than expected earnings. Everything looking very rosy there on their front. Listen, folks, Snapchat, remember when we, I don't know how many of you guys have been trading, but when Snapchat was bought by Facebook, there was a lot of people clamoring that he paid through the nose, and it did look like it, but man, was that a huge win for Facebook on that trade. I mean, that was just knocking it out of the park, right? All right, so with Facebook, I played this to the long side. We didn't have really a whole lot of volatility, and yes, it does look like we got some volatility crush here, and it was about 10 percentage points. But having said that, I thought we would find a lot of support here and only lose maybe a few percentage points. I did expect volatility to come out a little bit, but a directional move to offset that. I did not really expect this volatility to get sucked out of this market that quickly. So with that said, in Facebook, hold on a second. Well, let me find my Facebook trade here, because I paid about $6 or $9 for it. I kind of paid up for it. And let's see. Can't remember what my final price was. I've been chasing stuff all day today. And I went into the July and bought the 330 calls in there for $9.45. I was able to get out of those this morning on the open. Market rallied up quite nicely and was able to get out on the pullback. Of course, I had to chase it down and got out for $15.85 on that one. Actually, in my IRA, I also added a trade for earnings, and that was in Apple. I did this both in my IRA and in my trading portfolio because I was thinking I want to add some Apple into my IRA if given the opportunity, a good strike location, right? So with Apple, I went in and did the weeklies, did the April, sold the 130 puts in there for 84 cents, bought them back for 5 cents. Now, we did get some volatility coming out of this one. At the end of the day, I knew that the volatility, it's very similar to the last trade we were talking about, where volatility is extremely low heading into this earnings season. So it's going to be a little bit dicey. I'm actually trying out some new strategies, buying options, which I don't normally like to do during earnings. But this earnings, with volatility as low as it is, I'm going to toy around with playing with some of these other type of strategies as well. Apple, on this hand, I was looking at low volatility, thinking I might buy some calls in here, but decided that I wanted to sell some puts and maybe get a good strike here at the 130 area to get involved in Apple. Now, obviously, we're seeing this market really come off this morning, popping to the upside, and put that trade in before the open. So got out of both of those in my IRA, out for 84 cents in my, and 84 cents in my trading account as well for Apple. And then also Microsoft, we talked about this again, market continues to sell off. I'm going to go ahead and let these options get put to me. I actually might cover the options and then go in there and buy the outright stock right now, or sometime today, in order to just get long that stock, lower my overall cost basis on it. I don't want to pay for all of the fees that go involved in that exchange of the stock for the options. All right, so Microsoft is still coming off a little bit. I'm going to hold on to this trade into my account, look to overall lower cost basis. eBay was the other one that I played for earnings, and obviously eBay not doing very well. I thought they were going to do well with all these stimulus checks. Amazon doing well. I thought people would be throwing money at eBay, but obviously there is a lot of competition, and eBay has been resting on their laurels and not seeing the expansion they probably should have, as everybody else around them is converging in this space. So eBay needs to start doing something. I'm pulling the ripcord on this. I'm looking for a little bit of a bounce because we're right there close to that point of control. That's a magnet that's going to draw this up there to that level. So I'm going to hold on for a little bit longer in this eBay to try and get out for some a little bit of a bounce. Less of a loss, I guess, on eBay there. Hopefully so anyway. So Facebook out, Microsoft still working to get out. Look, probably going to take on Microsoft, play that. I think Microsoft is just, it's ridiculous that it's at these levels, to be quite honest, and working to get out of those other ones. All right, so that's it. That's all I got for you guys. Other than one last thing, check out today's webinar. Like I said, we are trying to streamline the process for you folks to spot the optimal option strategy for any given assumption, right? So a bullish strategy, it's not always just buying a call. We've done short put spreads. Today we're going to be on how to do a short put, all right? Like we talked about, kind of with a couple of these trades, those are earnings specific. I'll talk about how we can do this on any given day outside of earnings as well. All right, so check that out. If you can't take that, take it easy. Oh, check out the disclaimer.